Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, we're gonna go over the market, see what happened. It's the first day of the week, even though it's a Tuesday, because again, yesterday was closed. So again, shorter week, only 3 days left, but nonetheless, let's see what happened. If you enjoyed, don't forget to hit that like button, helps quite a bit. Subscribe, all that good stuff. But jumping into it, Tesla on 30 million volume, which isn't too bad, ending the day just slightly down at 757, almost 758, which is a 0.22% of a drop. So essentially flat for the majority of the day. Now, you can see the day opened up kind of nicely at the very first couple minutes and then just straight plummeted for the next about 25 minutes or so. And then we pretty much went back up to exactly the same spot, double topped, and then ever since then, we've been kind of just drifting sideways, slowly downwards. So now, the one thing that's interesting, which again, it's not a huge deal, but it is still something in my opinion to kind of, to note, if you will, is the fact that we did end the day lower than yesterday's, or I guess Friday's close. That's usually not a great sign. The reason I said this isn't too crazy, however, is because it's not that much lower. If this was like well below, especially below, like let's say like around the 754 and like, somewhere like say down here, like 750, then okay, that's, that's a little more bearish. But the fact that, it's close, I wouldn't put too much weight on it. It's still technically worse than it is good, right? But that one you can kind of, take with a grain of salt. So I wouldn't put too much weight into that, but nonetheless, something to keep in mind. Now, the one thing that we are kind of doing right now, you can see on this daily chart is, so we broke out of this initial little wedge. We were in the yellow line, but we're still in the red line wedge. That was the initial one I showed you guys like, I don't know, about a week ago or something like that. Right, that's the initial one where you can see, we never, even though we went above here, we never actually closed a daily above this red line, right? It started up here all the way back at 1150, went here. This is the earnings, I believe, the day after earnings. We ran up still again, went well above it, but the point is we never closed above it. That's the most important part in my opinion. Got knocked off twice, and even today we got knocked back down from this level once again. So I don't know. It was a weird day, and the reason is because like, the candle itself doesn't look horrible. Like, it doesn't look horrible. It's pretty much a textbook decline, I guess, or whatever. Or like, it got knocked down, textbook from this kind of channel, the top of the channel. But like, it shows a lot of buying pressure over here. That's a nice looking kind of hammer candle, honestly. The only issue is it's a red hammer candle. Red hammer candles are less good, and sometimes people refer to even hammer candles as just being reversals even in an uptrend. So in this case, some people actually view this candle as a reversal candle, even though it's a hammer candle, which usually is bullish. But because it's red, and also because just it signifies a reversal in general, some people still look at this now in this specific scenario after this run up as being a reversal. So now we're going to probably go down. I don't know. I don't put too much weight to that personally, but my personal thesis is the fact that I do believe we will go down. I believe we will go down and most likely fill this gap, or at least get relatively close to filling this gap, is my complete guess. Like at the very least, I think we'll go to 720, if not maybe to fill the gap at like 709 or 8 or whatever the gap is, right? Somewhere around that general level. That is my current belief. Now, one thing, of course, you guys know I like to look at is the Bollinger Bands. So interestingly enough, we're actually apparently on the daily over here, actually above the Bollinger Band, which isn't, actually, sorry, we're not. My mistake. Sorry. We were above it for, a decent part of the day, about half the day, if not more. Actually, we were well above it, but we ended the day under it. So we still technically got slapped down, from this resistance, even though we really tried, but there was just too much resistance, right? There was the resistance of this general 780 to 800 level. That's number one. The resistance of just being in this, red channel is number two. The Bollinger Band being number three. So there's just a bunch of resistance kind of coming in. Now, even though Tesla, I expect it to fall to, again, low 700s roughly, I actually don't think it's a bad thing. I think that's a bullish thing. And the reason I think it's a bullish thing is because it'll kind of, again, any, typical uptrend needs a downtrend to like, reaccumulate, whatever, that's fine. But this will be pretty important. So the reason I think it's a good thing is number one, again, reaccumulation, kind of, giving a little bit of rest, if you will, kind of, get the engines ready to go once again for the next flight, if you will, up north, hopefully. But the good thing is the fact that on this 1 hour chart, you can see, let me remove the drawings for now. We are essentially setting up what looks to be a pretty nice textbook, again, cup and handle that I showed you guys the last time, but we're also setting up a beautiful inverted head and shoulders. So let me go ahead and show that to you guys. So this is the head, the shoulder, and we can potentially set up the shoulder here if we drop back down. So again, around 700, like low 700. And that could be the right shoulder, potentially even 680. But extremely important to note, 680, I would say personally, is probably the most important level, with 700 being the level after, in a sense of you essentially, or at least we don't want to lose 700 ideally, but 680 especially we don't want to lose, because if we lose 700 but then especially 680, in my opinion, that breaks the pattern of this inverted head and shoulders. So keep that in mind, guys. I definitely want at least, like, I don't want to fall below 680. Let's just say that I don't want that and if we do, it better be a quick fall and recover very, very quickly. I don't want to see lower than that. That's number one. The other pattern that I talked about, I think it was on Friday, is the cup and handle pattern, right, where we have the cup here. And now we're potentially going to be forming the handle, right? So this is also another bullish pattern. The other way you can look at it is essentially, instead of just being cup and handle, which I mean it is, but you can also look at it as this part of this cup, the second half part of the cup in this case, is essentially just a bull flag, where essentially what we're doing is from here to here, we ran up, that's the pull, and now we're potentially setting up some kind of bull flag that's going to be, starting to form in the next, potentially this week, for instance, right? So we'll see, of course, if it forms or not. Maybe something else happens. Maybe we just completely skyrocket through. Like, anything is possible. But again, the idea is you want to try to figure out what seems to be the most likely scenario to play out. And to me, this seems to be the most likely scenario to play out, because on top of these bullish patterns forming that I did talk about on Friday, we're also getting rejected typically by this, wedge that we are, or downtrend, if you will, that we are in. So this will be like a 5 touch, right? So it'll be like a 1, 2, I guess this is a 3, 4, 5, 6, 7. That's actually a 7 touch, which is actually, a little more unorthodox, but nonetheless, that is not impossible. But I would be surprised if we fall below it just yet. I personally wouldn't be surprised if we kind of fall down a little bit, like I said, form that pattern, and then potentially break upwards and see what happens there. That is currently what I am personally looking for and looking at. And that is what I kind of want to see happen, right? So that's pretty much my current analysis, guys. There's really not a whole lot more to say. The RSI on the daily is starting to look pretty decent, kind of breaking out over here. You can see, it was kind of in a downtrend as well. If we go ahead and draw a kind of, like a trend line, something like this, you can see the RSI was in itself also kind of in a downtrend that broke out, which is great. And that happened pretty much as we started this rally over here, which is good. So we did break out, and, a lot of things don't look too bad. The issue is the overall macro, just the macroeconomics still looks quite horrible. So even though it does seem like a breakout is imminent, and especially once we break out of this pattern, this red line essentially, and we set up the, the cup and handle, we set up the bull flag, or we set up the, inverted head and shoulders, like there's a bunch of bullish patterns setting up, as long as, of course, 680 holds. Don't get me wrong, extremely important. 680 must hold, extremely, extremely important. It seems like we're setting up for some, fantastic bullish opportunities for the month of June, which happens to be Tesla's best month of the year, which all kind of lines up and makes sense. But it almost seems too obvious. That's the only part that's kind of making me a little skeptical, is that it just seems too obvious. And I feel like in a market like this, it's like, I don't know, maybe it just is this time. Maybe this is one of those situations where it really just is too obvious. But I don't know, whenever things seem a little too obvious like this, I'm a little cautious, just to be safe. Let's just say that. So just keep that in mind, guys. Don't go all in or something like that. Not financial advice, but don't go all in. Don't be stupid. Again, tread with caution. I personally have trimmed off some of my positions here. I have, a little more cash, maybe like 15% cash now. Maybe it's, I don't know, maybe like 10 to 15. I don't know the exact percent. I don't really give a shit about the percent. The point is I have cash a little bit. I trimmed off a little bit of my shares that I'm ready to buy if we do actually make that, dip down to the low 700s or 680s, and especially if we hold, I'm ready to deploy that, re-enter back into a full position, and continue riding it back up, assuming we break out and create these bullish plays and formations, which I really want to see. And I would really be happy. Now, the last thing we can look at, of course, are the indices. You can see the SPY is in its overall uptrend. Potentially, even tomorrow, maybe we'll fall down and potentially gap fill and kind of get sucked back up. That's also very possible. Same with the QQQ, right? Again, ideally, I want to see them gap fill, but for some reason, I don't think we will not yet. I don't know why. I just have this weird feeling that we're not going to actually fully gap fill. We're going to get like extremely close, but not actually fully gap fill. And potentially same thing with Tesla. I wouldn't be too surprised if that's kind of what happens, and we get like, maybe to like 715 or something like that, or even 710, but not exactly to the gap of like 706. Like that wouldn't surprise me too much either. So we'll see what happens with that, of course. And the final thing that you want to make sure you're paying attention to, guys, consistently is, of course, the VIX. The VIX is, of course, a good way to determine whether or not there's room in the market to run. And essentially, we're playing pretty textbook right now. It's bouncing off of support and resistances, pretty much right on the money. So we fall back down, bounce right off of this overall support that I have listed over here. You can see here, which was at the 25 to 26 area, and then we ran back up, pretty much got rejected back up at the 28 area, which ended up being support over here. This time it's of course acting as resistance, and that's great. And we got smacked back down, and now we're kind of chilling over here. So essentially what we want to see is, if we want more room to run for the indices, we want the VIX to start to keep falling down. But if the VIX potentially goes up a little bit, which it might go back up to, let's say, maybe like 27.5 again, as maybe the SPY, the QQQ, Tesla, etc., all kind of do that quick retracement that I've been talking about. That is very possible. But ultimately, if we want, the SPY, QQQ, and Tesla and everything to actually finally, break out and, go up even higher, like for instance, for Tesla to break out of this and let's say go up into like the mid 800s, for instance, well, we're definitely gonna need the VIX to fall back down and easily fall back down to like at the very least 24, if not maybe even a tad lower to like maybe, somewhere in the 23s, something like that. That's what we definitely would want to see. So we'll see what happens with that, but that's essentially what I'm currently seeing, guys. Let me know what you think down below. Hope you had a great long weekend, in America at least, if you live in America. I live in Canada personally, in case you didn't know, but nonetheless, that is it for this video, guys. Let me know what you think down below. I'll see you tomorrow. Peace.